Hello everyone, welcome to Help My Biz. At Help My Biz, we provide simple solutions to your business complications to help your business grow. Today, we are going to discuss about the income tax provisions on slum sale. Business houses have become more multifaceted and dynamic. Business houses prefer to keep separate segments for each business activity undertaken by them. Thus, each undertaking has a separate set of assets and liabilities. One of the prime examples is the Tata Motors sale of its defense business to Tata Advanced Systems. So what is slum sale? Slum sale, as per the Income Tax Act 1961, means sale of a whole undertaking to another business without considering the separate set of assets and liabilities for each segment or undertaking. So what are the tax effects on slum sale? Gain or loss arising from the sale of an undertaking shall be taxable under the head Capital Gains or Loss under the Income Tax Act. However, the question arises how to classify the sale. That is, whether it will be classified as a long-term capital gain or a short-term capital gain. If the undertaking is held for more than 36 months, the resulting gain or loss shall be treated as a long-term capital gain, and if it is held for less than 36 months, the same shall be classified as short-term capital gains. The tax rate for long-term capital gain is 20%. The tax rate for short-term capital gain, on the other hand, is the normal rates of taxation. We have to keep in mind that no indexation benefit shall be extended to the assessee. Now, let's have a look at the table of calculation of capital gain or loss on slum sale. The first is the full value of consideration. So what do we mean by full value of consideration? The fair market value shall be considered as the full value of consideration on the date of transfer. In purview of the amendments made in the Finance Act 2021, the fair market value of the capital asset shall be computed on the basis of higher of the two of the following manners. The first one is book value based formula, that is FMV1, and the second is the actual consideration received, that is FMV2. Previously, there was no such rule regarding the amount of consideration one would receive from his business. As such, the full value of consideration could be any amount decided between the parties. The firms would normally exploit this loophole by providing the consideration lower than the market value. Post-amendment, the due valuation rules under Rule 11 UA provides that the full value of consideration shall be based on the actual amount of consideration received or the fair market value, whichever is higher. Hence, through this amendment, the Income Tax Department tried to plug the gap on the tax arbitrage opportunity that slum sales provided. Having said the above, the key feature of slum sale, which is the primary reason for its attractiveness, that is, the cost of acquisition is deemed to be the net worth of the undertaking, still remains. Owing to this feature, despite the valuation rules and the complexities arising therefrom, slum sales are likely to continue to be opted for as a preferred mode of business transfer in India. Now comes the net worth. The net worth of the undertaking shall be considered as the cost of acquisition as per the relevant sections of the Income Tax Act. While computing the net worth, the following points need to be considered. Number 1, no revaluation of the assets and liabilities comprising the net block shall be considered. Number 2, if the block of assets of the undertaking include depreciable assets, the written down value of such assets as per the Act shall be considered. Number 3, in case of assets on which 100% deduction has been allowed under Section 35 AD, which gives us the list of the specified businesses, the value of such asset shall be considered as nil. In case of other assets, the book value of such asset shall be considered. If after considering the above mentioned points, the value of net worth appears to be negative, then the cost of acquisition shall be nil. There are some reporting formalities as well before slum sale is done by the entity. Form 3CA has to be filed by the company. Also, this form has to be duly certified by a practicing chartered accountant. Thank you so much for giving me your time. For more information on income tax related issues, please log on to helpmybiz.in. Thank you.